Hello and welcome to another episode of Blue Alpine TV. Today I would like to talk about what Visa and generally credit card issuers mean for the blockchain and the cryptocurrency space, and we'll quickly jump into why it is important that the New York Stock Exchange is finally giving out cryptocurrency data to its investors. A couple of weeks or months ago, there have been some news stories regarding some cryptocurrency-backed debit cards dropped from Visa network, leaving users scrambling. There was also these Visa credit cards and debit cards actually not working due to non-European residents, so not complying to the rules of the European Union. And the stories here are a bit mixed. So some say this has a lot to do with the verification. So again, the know your customer type of regulation and law that is quite strong in the European Union. And there are some theories that this might actually not be the reason, and that companies like Visa and or MasterCard are actually scared of blockchain technologies. I'm not really sure whether or how much of this is true, because if you think about it, both Visa and MasterCard make money on every transaction. Whether the money you load onto the card is cryptocurrency or fiat doesn't really matter, as long as they can control the entire network. In today's or this week's story, something new came up though. The Visa CEO says they will not process any Bitcoin transactions. So it's interesting that after a couple of weeks and months of these stories of Visa actually declining people's cards and blocking people's cards, that the CEO of Visa is actually coming out and saying that he's not a fan of Bitcoin. We at Visa won't process transactions that are cryptocurrency based. We will only process fiat currency based transactions. Why exactly? According to Kelly, Bitcoin is more of a commodity in which someone could invest in rather than a system of payment. Fair enough. He added that it was a hugely speculative commodity at that. Obviously, if we look at the cryptocurrency markets, it's quite volatile, it's quite speculative from time to time. However, if you're a believer in the fundamentals of these top coins, then you see that the potential of these currencies is actually greater, and maybe they are not even just currencies, they are actual platforms being built on top of this blockchain technology. So I think it's a bit short-sighted in that he only talks about Bitcoin. However, obviously Bitcoin is in the news right now, and in order to get into the news, it's quite easy to just call out Bitcoin and say, well, it's speculative, it's not good, it's just a bubble, etc., etc. Not saying that the Visa CEO said any of this, but here just quoting the article. He's actually not the only one. There are also, so I think the CEO of JP Morgan, Jamie Dimon, was also strongly against Bitcoin. However, he has revised that opinion. The CEO of the Bank of America, Brian Moynihan, when asked about virtual currencies during a post-earnings conference, he said that people could buy cryptocurrency assets at other companies, but not at Merrill Lynch. This was after the financial giant prohibited all its advisors from purchasing any cryptocurrency assets for clients. Now, as you can see, the big banks are kind of under pressure because the customers want alternative investment vehicles. Crypto assets, cryptocurrencies, blockchain, whatever you want to call it, blockchain technologies, offer this with the huge gains and huge potential in financial returns being kind of the side effect. Obviously, this is mainly communicated in the news, but if you look at it from an investor's and long-term perspective, this is actually a way to diversify your portfolio even further. So let's take Visa for example. If we say, or let's take generally a bank even, if we say that cryptocurrencies or parts of the blockchain network can be a replacement for a potential replacement for banks, then obviously the banks are scared for their own industry and their own interests. So they are blocking all this blockchain nonsense and are strongly and vehemently against it. We were able to see similar patterns when piracy came out with regards to downloading and streaming movies and music. So first of all, they said no streaming, no downloading, no anything in that regard. Now slowly the entertainment industry is embracing this type of change. We can also see similar a change happening in the car industry, where, let's say, the electric car was always something that has been belittled and laughed at. Now companies like Tesla or Nissan with their Leaf, these are companies that are being taken more seriously in their electric car efforts, because people have realized and companies have realized, oh, this is actually the potential for a huge big industry, but their main core business is actually in a different industry, in an industry that has been going on for the last 100 years. So this is also the banks and financial institutions, and I include Visa and MasterCard into this, basically saying, we don't care about this, or this is just speculative, or this is nothing for us. We do hundreds and thousands of transactions every second, and the blockchain can't handle it. All this belittling and laughing at these projects basically means that the entire market is causing some uproar in terms of these companies, these financial institutions, they can't ignore blockchain, Bitcoin, and all of these cryptocurrencies anymore. So they will more and more will have to somehow invest into blockchain one way or the other. Whether this will be Bitcoin, Ethereum, or any kind of other coin that we write, for example, reports on, this is not clear, obviously. Which brings me to the next point. So on the one hand, we see that Visa is actually saying they are not interested in Bitcoin. However, Visa is actually looking for blockchain engineers. So this is a job description that has been posted, I think, a couple of weeks ago. So we can see here that we are working on blockchain technology and want to add a highly motivated engineer to our team in Foster City, California. So Visa is definitely not ignoring the blockchain in any way. They are just scared that a competitor to their current system might take market share from them. So obviously the smart choice would be here to actually invest into their own resource and build up a research department and an engineering department with blockchain experts in order to bring their own type of technology onto the market. What is funny though is they expect experience in trade finance, equities, payments processing, wholesale credit, and blockchain technical expertise that is hands-on. They should show a demonstrated passion for fintech innovation, open source software contributions, blockchain cryptography, and data science. And now the most interesting part, total industry experience must be 8+ years. Bitcoin has been around for around 10 years now, a bit more, I think. And other technologies such as Ethereum are not even that old. So industry experience with 8 years is very not likely to be found somewhere, but maybe they can find them. We can also see that has worked with Ripple, Ethereum, and or Bitcoin blockchain. So it looks like Bitcoin is interesting for Visa. Ethereum, obviously the developers platform for blockchain applications. Ripple, because it has a quite strong connection to existing banks. Solidity is the smart contract language, programming language on the Ethereum network. So they are definitely looking for people who have been in the trenches for the last couple of years and have worked on Bitcoin applications. So even though they are not taking Bitcoin or blockchain, or let's say just Bitcoin, not as seriously, they are definitely investing into the blockchain with people who have Bitcoin experience. This is, in my opinion, a very good sign. So the market is slowly, very slowly maturing and going into the way of people and financial institutions actually taking this whole blockchain revolution seriously. And we definitely believe this is the smart thing to do versus just saying Bitcoin cryptocurrency blockchain is not the way to go. Another good and interesting sign is the NYSE, which is the New York Stock Exchange owner, has announced that they will launch a cryptocurrency data feed for their institutional clients. So in the previous episodes, we've talked about the futures, contracts, and other potential financial instruments that will come for cryptocurrencies. So the market will maybe in the short term get even more volatile, but as a whole industry, it will help mature the market and grow even further. So this is basically kind of a system like Bloomberg. So imagine this kind of system where you get industry information in real time, basically about the most, I think, top 50 coin or top 20 coins. This is also very customized depending on the client. So they will get different types of data. High-speed stock traders and asset managers are the main users of this. And this could be like simple pricing data, but also buy and sell walls. So exchange order books, which will help them anticipate market moves and take advantage of arbitrage opportunities. They are using the main exchanges such as Bitfinex, Bitstamp, so known exchanges. Interestingly enough, they're not using Gemini, GDEX, Coinbase, like the big cryptocurrency exchanges from the West. They are not included yet. However, obviously, this can be added anytime. So this is just the beginning, but it's definitely a step into the right and right direction, also showing that the market is maturing. And with that, basically, I want to end this episode. So we're definitely going into the right direction with cryptocurrencies being taken seriously, even if big financial institutions are still a bit belittling cryptocurrencies, Bitcoin and blockchain as a whole. But definitely there are steps that these big players are taking in order to be not caught in the wild and be prepared for this blockchain change and this maturing market. And with that, I will see you on the next episode. Don't forget to like and subscribe, and I'll see you next time.